Hello, everyone. It's good to see you, and I'm glad everyone's able to join us again for this continued webinar series that we call Writing the Markets with UOB Asset Management. I believe many of you may have turned into the first series where we highlighted in January our 2001 investment outlook for this year. And I believe that if anyone has missed that, you can go to our website at UOB Asset Management. It's at uobam.com.sg, and you can recap that at any time. Now, within that first webcast, we highlighted that one of our key investment themes for 2001 is that we are overweight Asia. We like Asian equities this year, we like Asian fixed income, and we like Asian currencies, and we think they're all going to outperform. We also highlighted that the reasons that we like this and the periods we usually overweight Asia are periods that, well, we highlight that firstly that Asia has underperformed the world in the past decade, and there's usually catch-up after that. We also highlighted that we think the worst of the trade wars are over, and that although the Biden administration is not necessarily going to be China-friendly, we do think that it is going to be much more professional and diplomatic in its negotiations with China, and that both businesses and investment markets are probably going to be more stable in that backdrop. We also noted that valuations of Asia are, well, valuations are expensive everywhere, but they're better in Asia than most parts of the world. And that we also have traditional signals, periods of a lower US dollar, periods of rising global trade, and periods of solid global growth are all periods where Asia does well. And that's the reasons why we're tactically overweighting Asia. But internally in our discussions at UOB Asset Management, and in particular, our CEO, Teo Boon Kiat, he likes to highlight that those aren't the real reasons that we should be or that our clients should be buying Asia. The real reasons are that Asia's at the heart of some of the most exciting megatrends that are going on in the world. Whether they be sort of these demand side trends, such as the rising middle class in Asia, that is soon going to become the largest middle class consumer in the world and even outstripping the demand that comes out of the US. Or whether it's the supply side dynamics where Asia is at the heart of the building of these semiconductors and 5G technology and the electric vehicles and so forth. And so within this webinar series, what we wanted to do is tap on our investment teams that we have on the ground in Asia. I think many of you know that we have investment teams throughout Southeast Asia, in Malaysia and Thailand, Indonesia and Vietnam. And in North Asia, we have offices in Taiwan, and we have a joint venture with Ping An in China. And on our typical morning calls, we share all these investment themes on an ongoing daily basis. But today, what we want to do is tap on these teams to highlight some of the most exciting trends that we think our clients should be aware of. And so today we will be going through in those various offices. But to start off, I wanted to invite Chong Jin-Ye. He's the Chief Investment Officer based here in Singapore, to start us off by giving an overview of these investment themes and some of these mega trends that are going on in Asia. So Jin-Ye, first, can I ask you to highlight some of the themes for us today?
Okay, thank you, Tony. Well, I think as we emerge from the COVID-19 pandemic, we from UBM have identified several mega trends that will drive growth in Asia. First of all, the digital transformation and e-commerce. Secondly, environmental sustainability. Last but not least, the growing affluence of middle-income population and favorable demographics in several populous countries. Some of the structural reasons behind this megatrend in Asia, if you look at the world top 10 internet companies by market cap as at end 2020, 4 of them are Chinese companies: Tencent, Alibaba, Baidu, JD.com. Beside your usual, Amazon, Google, Facebook. The next structural reason is that China leads the US in artificial intelligence patent applications and in the investment and financing area. And globally, China is always one of the top 3 in the share of global AI experts and talents, and share of papers published in the field of artificial intelligence. The next structural opportunity that we find in Asia is the pace of digitalization and the increasing number of internet users. Asia has seen the fastest rise in internet users and accounts for half the world internet users now. On the chart on the right-hand side, you can see that the number of internet users that have grown from 2000 and 2019 in countries like China, India, Indonesia has been significantly higher than many parts of the world. I think this lead to the digital financial services in ASEAN is also expected to generate 38 billion by 2025 from 11 billion in 2019. This gives us a CAGR growth of 22% over the next 5 years. This leads to the potential growth in e-commerce in ASEAN. As you can see in the chart below, the e-commerce penetration in North Asia like China and South Korea, they are above 20%. While for the rest of the ASEAN, they are either 10% or lower. And that explains why the e-commerce potential in ASEAN remains very attractive. The next will be the phenomenal growth rate across Asia region. We expect countries like Indonesia, Thailand, and Vietnam likely to enjoy 40% growth in the area of e-commerce, as compared to China that is around 20%. So we are seeing the growth rate double of what we're going to see in China. The other mega trend that we see in Asia is in the area of environmental sustainability. Some of the drivers behind this mega trend in the government sector, as you can see, China pledged carbon neutrality by 2060. Japan and Korea are targeting 2050 to be carbon neutral. Singapore government also recently announced the Green Plan 2030. On the regulation front, MAS finalizes environmental risk management guidelines for banks. Singapore is consulting on taxonomy for the financing of environmental sustainable activities. In the area of assets owner, Malaysia Top Pension Fund, EPF, sees ESG as the vaccine for any crisis. Thailand GPF, Government Pension Fund, also has adopted the ESG lens. This continues to reinforce sustainability as a key investment focus from the Asian perspective. Some of the trend in the sustainability area as follows. Environmental sustainability. As we know, Asia faces severe climate hazards. In the area of human capital management, COVID-19 has brought a renewed focus on human capital and labor management. Corporate governance has always been a very important issue in Asian market. This leads to some of the sustainability investment teams in Asia, like the renewable energy. China has the largest market for solar energy. Electric vehicles, EV battery supply chain dominated by Asia. And mining and materials, Indonesia poised to benefit from the growing demand of nickel. And the last mega trend that we see in Asia will be the demographic growth. Asia is on track to top 50% of global GDP by 2040. As you can see, the share of middle class globally, Asia is going to grow from 54% to 65% by 2030. And by 2030, Asia will drive 50% of future consumption growth. I think this set us on a multi-year mega trend in Asia. I think with that, I'll pass it back to Tony. Thanks.
Thanks for that summary. Now, next we will go to tap on the rest of the team. But before we do that, I have a short video for you to introduce this next segment. Okay, so I want to start off by focusing on North Asia. And I have with us Paul Ho, who will help coordinate our views and summarize what we're seeing in terms of the key trends and exciting themes that we like in North Asia.
Thank you, Tony. Now, you've heard earlier about Asia being at the heart of some of the emerging global megatrends. Well, one cannot really talk about Asia without talking about the elephant in the room, which is China. Last year, China was the first to enter into the COVID-19 crisis, and consequently, they were also the first to get out of the crisis. In fact, according to IMF's projections, China will be the only major economy in the world to have recorded a positive GDP growth in 2020. In the words of the influential foreign policy magazine in the US, China has the V-shaped recovery of which Trump can only dream. But when we look at China, we see not only growth alone, but also the significant strides China is taking in some of the fastest growing and innovative industries. Take EV, for instance. The world is talking about the eventual replacement of traditional combustion engine cars to electric vehicles driven by the climate change concerns. Here, there's no doubt that China is way ahead of the competition. In fact, it already owns 40% of the world's EV population. And in the next decade or so, we're likely to see at least another tenfold growth in EVs in China. Now, in the slide, you see the top-selling EV model in China, the GM Wuling Hongguang, selling for just 4,100 US dollars, or around 6,000 Singapore dollars. But that is not all. China is going to benefit from the growth in EVs all around the world as well. Although it does not produce most of the raw materials needed for the production of EV batteries, it is actually responsible for refining 80% of the chemicals that go into these batteries. It also produces 66% of the cathodes and anodes used in the batteries, and it produces 73% of the world's lithium-ion battery cells. In other words, China companies now dominate the supply chain for EV batteries. In fact, in terms of the overall renewable energy, China is by far the largest and the fastest growing market in the world. As you can see, when it comes to switching to more sustainable means of power production, no other country is even anywhere near what China has done, even though many may be talking a lot more than China. And as they say, seeing is believing. Another of the world's fastest growing industry is the biotech industry. The biotech revolution promises to change the lives of millions of patients that are facing diseases and conditions that have no cure currently. Although China is still behind the US in terms of biotech drug pipeline, it is already ranked the world's second largest, and certainly has been the world's fastest growing biotech market. China is clearly at the forefront of the biotech revolution, and we believe that we will see several large Chinese companies dominate this space in the next decade or so. In fact, we're already seeing China develop biotech drugs exported to the rest of the world. However, lest we think that North Asia is just about China, Korea has been grabbing lots of global attention as well. In the latest survey conducted by Bloomberg, Korea has been ranked the #1 most innovative country in the world for 2021. This should not come as a surprise, as Korean companies have been some of the most creative in the world. Just think Korean drama or K-pop. Korean tech companies such as Samsung Electronics has also been at the cutting edge of technologies ranging from semiconductors, display, mobile applications, batteries, biotech, and communications. Despite being a much smaller country than China and the US, Korea has managed to develop some of the world's leading technologies in these areas. Take 5G technology, for instance. Korea and China are neck and neck in terms of the number of critical 5G patents developed and owned, far ahead of any other country in the world. And why is 5G important? We believe it is the gateway technology to some of the greatest innovations of our times. It enables much greater data transmission speeds with much less latency or lag time. This is absolutely essential for development of self-driving cars in the future, as the vehicles transmit massive amounts of real-time data to and from the car to the servers, guiding the car safely to your destination. Or take the development of IoT, or the Internet of Things. This is a world where millions of household appliances gossip to each other about your habits. Yes, it sounds spooky, doesn't it? But that's exactly what it does. It tracks your behavior and tries to predict what you'll do next. Maybe you can order your next tub of Ben & Jerry's ice cream just as you run out of it. Or prepare your breakfast and have your Grab car waiting for you at the doorsteps when you get ready for work each morning. Now, all this can only be possible with the adoption of 5G technology. In fact, this is fast becoming a reality. In China, we are already seeing self-driving robo-taxi companies like AutoX here, backed by Alibaba, plying the streets of Shenzhen. So as you can see, North Asian countries like China, Korea, and indeed Taiwan are leading the charge into this brave new world of innovation and technology. In the next few years, many companies in these countries will be beneficiaries of the rapid growth in these areas. And long-term investors in these companies should reap tremendous rewards from their investments. With that, I thank you and hand you back to Tony.
Okay, thanks, Paul. I would now want to stay in North Asia, and in particular, there are a lot of exciting themes of what's going on in Taiwan, especially with the semiconductors and the heart of the technology around the world. So to comment on that, I wanted to bring in Samuel Yang. He's the Chief Investment Officer at UOB Asset Management in Taiwan. So Samuel, can you please join us and summarize for us?
Hi, everyone. Welcome to Taiwan. Recent automotive chip shortage in the US, Germany, and Japan highlight the unbalanced demand and supply in the semiconductor industry. It means that the secure chip production is not just an economic issue, but even escalate to a national security issue. Today, I would like to have a quick briefing on Taiwan's strategic value in the chip industry and try to conclude some of the tech emerging trends derived from Taiwan. First, let's take a look at Taiwan foreign direct investment. FDI in Taiwan has shown rapid growth since 2018, when Trump started to impose a series of sanctions and tariffs on China. We can see the left-hand chart from the 18 to 20. Global supply chain readjustment has boosted Taiwan FDI growth. For example, Microsoft just announced it would build a data center here in Taiwan, creating over 30,000 jobs with overall investment amount over $10 billion until 2024. Moving on the next. Total market value of the Taiwan semiconductor industry in 2019 reached $89 billion. The market value will reach $100 billion in 2020. Taiwan semiconductor market value breakdown is shown in the left chart. Foundry accounts the half, followed by IC design, assembly, and DRAM. On the global basis, Taiwan market share in overall semiconductor is around 17%, ranked number 2 in the world. For the subsector, foundry and assembly, they are all in the first place, represented by TSMC and ASE. In the IC design sub-industry, Taiwan ranked number 2, only behind the US, represented by MediaTek and Novatek. So let's moving forward. A foreign investor commitment in Taiwan equity market actually just reflect their confidence in Taiwan. The chart shows the FI holdings in terms of a market cap has been rose over time and reached 11.5 trillion Taiwanese dollar in 2020. What is interesting to highlight is that the foreign investor put a higher weighting in IT industry related stocks, especially for those dominant companies like TSMC and ASE, which in line with previous mentioned their leading position in the world. And when it comes to the IT industry in Taiwan, I think TSMC is the top pick as it is most representative. So let's proceed to find out more about TSMC. We can see the chart during 2010 to 15. TSMC's revenue growth at a 15% CAGR, led by stronger growth in smartphone plus 4G demand and the increasing iPhone chip orders from Apple. However, from 19 to 20 onward, we see a different story. When 5G infrastructure gets more and more matured, we are seeing explosive demand in cloud computing, AI, IoT applications. This is the story happening for now. Okay, let's moving on. We can see from the chart, TSMC capital intensity is cycling on decade by decade basis. The cycle actually aligned with 3G to 4G to 5G migration. And what is interesting about for each cycle boom, actually lasting for at least 4 to 5 years. The 5G migration boom started from 2019, where we see the TSMC started to increase its capex. For the past 20 years, TSMC has done it right twice in capturing up the PC and smartphone demand. If 5G has more application and more impact on our life, we can expect at least a 15 to 20% growth momentum all the way to 2023. Emerging into 5G, every electronic devices can be connected, just as mentioned in the previous session. That means that the chip is not only inside the mobile phone, PC, or laptop. All home appliances will need chip inside. Cars also need more chips to fulfill the autopilot. In the coming years, physical PC even could be replaced by cloud computing. All these 5G developments boost IoT and HPC to be the twin growth engine for TSMC. So let's look at the next slide. We can see from the table for TSMC sales and the growth breakdown. For the mobile segment, it has been the main revenue base for TSMC. However, the slower growth in the coming years is anticipated. For the HPC segment, I think this is also the most important part, and also no doubt will be the growth engine number one for TSMC. HPC performed super well last year. The increasing demand in 5G and AI makes the shortage of related products, including ARM-based CPU, GPUs, AI accelerators. HPC will still be the spotlight. It delivers the highest margin and generates 15 to 20% of CAGR growth. Then, for the IoT segment, this will be the growth engine number two for TSMC. So, in summary, I have 2 points to highlight to close my part. First, with the promising growth in 5G, TSMC can secure its advanced production process and then maintain its leading position against a competitor in foundry business. It will favor its downstream partner and equipment manufacturer as well. Second, based on TSMC capex, we see a continued uptrend and the potential opportunity in 5G, HPC, and IoT. With the development and evolving of 5G, we believe the tech sector and the related subsector will still be the investment mainstream for the year and benefiting those Taiwan leading companies. Yeah, I think here is the end of my presentation. I will hand it back to you, Tony.
And I must say, hearing your regular updates on companies like TSMC have really been fascinating. And I find it amazing that historical leaders like Intel really just can't even keep up with what they're doing. Anyway, I wanted to turn now to Southeast Asia. I think I'll first bring in our newest member of the UOB Asset Management family, and that's our Vietnam office. And so firstly, then, let me introduce Ms. La, who is the Chief Executive Office at UOB Asset Management in Vietnam. could I ask you to give your presentation?
Thank you, Tony. Good afternoon to everyone. Welcome to Vietnam. I will share with you my thoughts on growth drivers for Vietnam in the coming years. As you probably know, Vietnam is one of the fastest growing economies in the region. A key growth driver is the country's favorable demographics, with a population of nearly 100 million, 82% under the age of 55, and the country has 98% literacy rate. These fundamentals have supported Vietnam's growth in the last 2 decades, with annual GDP growth rate consistently being in the range of 6 and 7%. Individual wealth has risen significantly as a result. The chart on the right-hand side shows GDP per capita in Vietnam had an exponential growth of more than 6 times over the last 20 years. Going in tandem with the strong economic growth is fast urbanization in big cities, especially in Ho Chi Minh City and Hanoi. In the chart on the left-hand side, you can see that urbanization level in Vietnam is expected to reach 43% by 2030 and will pass 50% by 2045, from 37% in 2019. The country's affluent class has also been rapidly increasing and mightily driving up domestic demand for higher-end products and services in real estate, tourism, retail, education, healthcare, etc. According to the World Bank, more than half of the Vietnamese population will enter global middle class by 2035. I think the booming consumer demand driven by this segment will continue to be an important growth driver for Vietnam in the years to come. Apart from the internal strength, another growth engine for Vietnam is foreign direct investment. The country attracts FDI with its strategic geographic position in the region, a cheap and abundant workforce, and political stability. And I think also the improving investment environment and tax incentive by the government to FDI enterprises, especially in new technologies. Another factor that helps Vietnam attract more FDI is the free trade agreements it has signed with large economic blocs and trade partners in recent years, with the EU, the UK, the ASEAN, many big trade partners in Asia, and also the mega FTA called CPTPP. These FTAs have strongly supported Vietnam's exports in recent years and benefiting FDI enterprises in Vietnam who have contributed to around 2/3 of the country's total export in the last several years. Having said that, external factors do help too. Under ongoing diversification of global supply chains brought about by the trade tensions between the US and China and huge disruption caused by the pandemic, we have seen an increasing trend of big tech corporations shifting their production facility from China to Vietnam. And I will elaborate a bit more on this in the next slide. So in the chart, you can see that FDI disbursement in Vietnam has steadily increased over the years. Even for a year like 2020, the country still received a similar amount of disbursed FDI as it did in 2019. And I think that this trend of FDI would continue to benefit sectors like logistics and industrial parks in Vietnam. As I have mentioned, from early 2020, we've seen an increasing trend of big tech corporations expanding their investment in Vietnam and shifting their production facility from China to this country. Among these, Samsung is the biggest FDI investor in the country by far. Early last year, Samsung conducted the groundbreaking activity for its $220 million USD R&D center in Hanoi. This is the first R&D center at this scale Samsung ever built outside Korea, and it brings Samsung's total investment in the country to 17 billion USD after 12 years. Other big tech players joining this trend in the last 2 years, just to name a few, are Intel, LG, Foxconn, Gotek, Luxshare, and megatrends. And I believe this trend will continue and will help lift Vietnam's position in global supply chain map in the near future. So in short, I think Vietnam's growth drivers come from both internal and external. From within, it's the dynamic and wrongly growing economy, the rising wealth of the nation and its people, especially the middle income class. They will continue to fuel domestic demand and support growth. Externally, increasing FDI and robust flows into tech sector will remain another crucial growth engine for Vietnam in the coming years. So with this, I end my part. Thank you, and back to you, Tony.
Okay, thank you, Ms. Lê. Now, we want to continue on with our review of Southeast Asia, and we want to update with some of the exciting trends in Thailand. So if I could ask our Chief Investment Officer in Thailand, Jertpan, could you give us an overview of what you're seeing?
Thank you, Tony. Welcome to Thailand. Okay, I would like to highlight two megatrends in Thailand. The first one is the e-commerce business, just like any other country in this region. But for Thailand, I can say that we are now entering the fast-growing stage of e-commerce. The second trend is something that we already had, and it was our megatrend for many years, which is medical tourism on the e-commerce. Show you the numbers, 41% growth for 3 years CAGR. But even this growth, we still only have 3% sales penetration rate of retail sales. So you can see from the number that we have more room to grow. And also on ARPU, or average revenue per user in Thailand, was only $124 in 2019. This number is quite low comparing to peers. It was only 1/4 of the worldwide ARPU and 1/10 comparing to the top-ranking country like in China and South Korea. Even we had a massive growth in the last 3 years, but right now in Thailand, number of e-commerce is still a tiny portion compared to the retail sales overall. There's still a huge amount of untapped potential to go. So, but the question is this growth momentum will go on for many years? Let's look at the next slides. We have two supportive reasons on this. The first is the digital ecosystem, and the second is the e-banking platform. On digital ecosystem, firstly, we have various types of e-wallets. This is will suit clients' demand. On the logistics, this industry is now developing. Now we deliver faster. We deliver with lower cost or lower price. This is very attractive to the clients and customer, even the existing one or the new clients. And lastly, on the channel, I think we have quite a balanced market structure. On the channel, we have 40% from social media, like in Lines, Facebook, and Instagram, and 35% from e-marketplace like Shopee and Lazada. Another 25% from e-tailer and brand.com. I just want to note that shopping online in Thailand via social media is very popular. Let's look at the next slide. On the e-banking platform. E-banking platform in Thailand is one of the core foundation for our e-commerce business, and it was established quite well in the past. Thailand has a high adoption rate on financial service application. You can see from the slides that we have a very high rating, and much higher than other countries in the world. This facilitates the adoption of e-payment and also e-commerce as well. In terms of payment or transaction, and also in terms of value, 70% by mobile banking and another around 30% from e-wallets. So e-commerce, in conclusion, in Thailand, in brief, I can say that we have more room to grow. We have a very good reason to support it, which is e-banking and also ecosystem. Then let's move to the next megatrend in Thailand. On the next slides, which is the medical tourism. Medical tourism is one of Thailand's strength for many years, but last year we got a hiccup on COVID-19 situation. Everybody knows that we have good resources, we have good doctors, we have good hospitals, and also we have good services, as these are our strength for many years. In terms of number, we rank in number 5 on medical tourism receipt, only behind United States, France, Turkey, and Belgium. And in terms of market share, we have 5% market share on the medical tourism expenditure. I think after the vaccine has been distributed all around the world this year, next year, and people can travel, this trend will come back strongly again. And this is another mega trend in Thailand. That's all from me. I turn it back to you, Tony.
Hey, thanks, Cherdpan. And I would admit I've been missing my trips to Thailand, and I hope the vaccine is giving out quickly here and we can catch up again. Okay, so next we'll move on to our Indonesia office, and we have Albert, who's our Chief Investment Officer in Indonesia. So Albert, can I ask you to provide some of the themes that you're seeing?
Thank you, Tony. I hope you also visit Bali if you see this slide. Okay, greetings from Jakarta. So we have Indonesia have a macro and a demographic tailwind, I think. So if we see Indonesia is the 4th largest population in the world after China, India, and US. We have a large young demographics and never expanding middle class. We have a population of around 270 million in 2020, and also 79% of it is below 55 years old or is a working age population. We have also 52 million middle class and rapidly increasing on year-on-year basis. This implies that our economic potential is huge, given the basis that we have. Therefore, the consensus have been pointing towards a Goldilocks scenarios in Indonesia, with the GDP growth projected to grow above 4% at least in 2021 this year. And I think Indonesia to become a top 10 largest economy by 2030. Our mobile service population is around 120 million users, which is around 50% of Southeast Asia internet population. We have more than 4 hours on the phone. This underpenetrated population within the formal sectors, let's say we have 54% population is unbanked, well, versus the 98% mobile internet adoption rate, means that going forward, technology will play a crucial role in economic growth. And more importantly, economic equity, which should help push Indonesia economic growth. This large and young demographic bonus has been maximized by government to push the Omnibus Law, which has been passed last year. The Omnibus Law will ease investment hurdles for foreign investment to invest directly in Indonesia and in many areas and sectors such as digital economy or battery EV ecosystem, which we will discuss further. So if we move to the digital economy, Indonesia is the biggest digital economy in Southeast Asia. With e-commerce as the front runner, we expect to surpass its Southeast Asian peers valued at 125 billion in 2025. For example, online retail sales in Indonesia are still relatively small. Only less than 5% of it from the online e-commerce from the total retail sales in Indonesia. If we have to compare with China, they have reached more than 25% of total sales coming from its e-commerce sales in 2020. Also, if talking about the United States, they have reached only around 15%. This provides a huge room to growth, especially given we have a large millennial generation. And if anything, this COVID situation will only speed up the penetration of digital economy. So beyond e-commerce, we have also digital economy that is projected to grow exponential because Indonesia as an archipelagic country makeup means that growth tends to be unequal. And therefore, the ease of access provided by the use of technology, not just in terms of e-commerce, but also implementation in banks' KYC, this will cut through the impediments from the traditional sectors. Now, I'll give you an example. What is the potential from our digital economy platform? There are three main things there to point out for investor in digital economy. First one is the listed company investment. As we know, listed company through their investment arms, let's say we have a VC that invested in startups to leverage their own business process, and importantly, they want to exit through IPO as well. Basically, for a quick investor to the company, we have also provide another potential company which we invest in. Second is coming from the business efficiency. Usage of digital solution to increase the efficiency by adopting new solutions. Let's say in this example is logistics or embracing new marketplace, these things are e-commerce. Third one is the digital banks. Indonesia, we have a huge unbanked potential, which is 45% of population is unbanked. This is spreading across the islands in Indonesia. We have an archipelagic nation, means that traditional banks have had hurdles reaching the unbanked population. When we enter the digital bank, this empowered by technology and startups, I think we can move forward to reach the unbanked population. Some example illustration on how this translates to the listed company in Indonesia. Established listed companies such as Telkom, in this case, have a VC arm. They call it MDI Ventures. MDI Ventures invest in startups like just like a conventional VC would, yeah. And also takes strategic position in Indonesia, SOE startup companies such as Link Aja, as you can see. Going forward, exit opportunities from seed investment will mean profit for these listed companies and potential companies that we can invest in the public market. Second example for the business efficiency, the collaboration between the so-called traditional manufacturing company and the digital focused companies. As in the case, we have an example of Unilever. They have collaborating with the IMJS, which is the Seino Logistics, that provide digital solution for them. It said that they can decrease the logistic cost quite significant. And also we have a Tokopedia who have a stake in ASA, which is they have a Antar Aja Logistic. This is providing their delivery solution. And the last one I want to bring up is the digital banks, which is going forward, we should see more of startup-led digital banks. As in this case, I will give example of Gojek acquisition of Bank Jago. And importantly, empowered digital banks appear to tap into the huge unbanked population, as I said earlier. Now, as we move on forward to the next new commodity, which probably not as new as you thought, but this is currently a huge upside, I think, which is nickel. Indonesia has the world's biggest nickel reserve in the world, and currently has an export ban on the commodity as the country is looking to attract more investment into their downstream capabilities, including the investment of smelters and importantly, the EV battery making capabilities moving forward. Currently, nickel is mainly used for the stainless steel, which is around 70%, and battery only making up 5% of its usage. But with the push for EVs, this number should go up. And if you know the battery content, nickel is content like 80% of the battery itself. Means that it will catch a big position of nickel usage going forward. So Indonesia doesn't really stand down, and they step up again by assembling Indonesia Battery Holdings as an avenue for Indonesia to develop their downstream capabilities. Deal between Antam and LG Chemical has been signed, and although we heard the news that Tesla has announced to build its the car manufacturing in India, Indonesia will be still one of the main considerations for them to build their ESS, or we know that energy storage system industries. So to wrap up, Indonesia, a large and young demographic, giving a great potential for digital economy to grow exponentially. Although COVID situation slowing down overall GDP growth, but it will only speed up the process of digitalizing economy through all segments. And with recent Omnibus Law has been passed, this will enabling the foreign investor to invest in Indonesia and boosting growth in all sectors, including nickel, as one of the most beneficiary, especially during the trend of green climate change, megatrend that Junia mentioned earlier, which will translate to higher EV car sales going forward. So that's for Indonesia for now. Tony, back to you. Thank you.
Okay, thanks, Albert. And yes, your slide on Bali was beautiful, and I'll make that at the top of my travel plans post-vaccination. So Colin is the chief investment, or he's the head of our Asian equity fund and coordinates things for Singapore. And I wanted Colin to give an update of some of the themes that we're seeing in Colin. So Colin, if you can jump ahead in the schedule, can we ask you to give your themes that you're seeing?
Thanks, Tony. Good afternoon, everyone. In Singapore, we have identified 3 areas of what we term as secular growth trends in Singapore, namely the digital transformation that I believe a lot of our speakers have already highlighted, as well as the e-commerce growth. And I also want to highlight that Singapore government is likely and continue to push for its wealth management industry, as well as in the coming years to also push the sustainable movement in Singapore. Accelerated by the COVID pandemic, I would say that the online retail sales continue to experience stellar growth, particularly in the last few quarters, as you can see in the chart. The pandemic has basically changed the life of people, especially in Singapore. And a lot of housewives or even individuals are going online shopping. E-commerce players like Shopee, Lazada basically compete for market share in terms of online sales. And other players are also positioned to obtain a piece of this growth in the e-commerce ecosystem. Just want to highlight here is that the digital transformation is already underway in Singapore when MAS awarded 4 digital licenses 2 months ago, back in December of 2020. Basically, with the by awarding 4 licenses, and one of the winners of the license is the huge financial technology company Ant Financial, which also known for its e-pay, e-wallet, Alipay, and this is linked to the Alibaba Group, which have actually developed a range of apps that will provide banking and payment system ranging from loans to insurance, private banking. And certainly, I think with the with this digital bank license providing the banking infrastructure for e-commerce, I believe we are going to see exponential growth in the coming months and years. Singapore continues to grow its wealth management industry to be the leading center in Asia. The asset under management has actually reached $4 trillion, with 76% actually originated outside Singapore. So basically, Singapore is becoming the private banking center in Asia. And with the strong growth in wealth management assets, the investments are broadly likely to be focused on income-based products. REITs, or or known as the real estate investment trust, has emerged as an asset class where wealth managers can invest for attractive dividend yield coupled with lower volatility. We believe interest rates are likely to continue to remain low in the foreseeable future, and as REITs will likely to remain very relevant. The Singapore government has provided clear rules and incentives for making REITs listing on the Singapore Exchange, with well-regulated tax transparency laws, corporate governance, as well as a well-tested judicial system. As you can observe in the chart, the Sing REITs market has actually grown steadily over the past decade and have many diverse subsectors ranging from industrials to retail to office. So you can choose actually many different types of REITs that are listed on the Singapore Stock Exchange. As we believe growing affluence is going to be a secular theme in Asia, wealth management industries will continue to grow and underpinning the demand for this REITs asset class. And on the final point, just want to highlight here is that the Singapore government has just embarked its ambitious green plan to do its part to tackle climate change and reducing carbon emissions. This plan was only unveiled early this month and hope to provide a catalyst for a broader national movement to take action to secure a sustainable future. As there are several key initiatives, especially in the areas of green energy, green economy, companies that are embracing this sustainable movement should enjoy new growth opportunity in the coming years. Thank you, everyone, for listening. Back to you, Tony.
Francis, Francis Ng is the Chief Investment Officer of our Malaysia office. So Francis, can you highlight some of the themes you're seeing?
Okay. Good afternoon, everyone. So I actually want to touch on 2 of the mega trends that Junior talked about, which was digitalization and e-commerce, as well as sustainability. So let's start with digitalization and e-commerce. Recently, I had the privilege of actually sitting in on a presentation by Google, to talk about the Malaysian internet economy and to see some of the insights that they have. And actually, it was a very interesting talk. According to Google, the size of the internet economy in Malaysia was $11 billion in the year 2020. So that's about 6% growth year on year. So for some, they may see 6% growth is not the sort of growth rates that you associate with the internet economy, which is supposed to be fast growing, right? The reason is there are actually four main components in this internet economy. The first is e-commerce. So if you transacted something on Lazada and Shopee, it will get captured there. The second thing is actually online travel. If you booked a flight ticket or you booked hotel accommodation online, that will get captured there. The third one is actually food and transportation. So if you ordered food through GrabFood, that will get captured there. And finally, online media, which is basically advertisement. Yeah. So actually in 2019, online travel was the single largest component within the internet economy. And in 2020, we all know what happened. With COVID, the online travel market basically contracted quite significantly, right? But fortunately, we had very strong growth in e-commerce. So whatever growth that we saw in e-commerce actually more than offset the decline that we saw in online travel. And because of that, we still managed to get about 6% growth. Yeah. So if you look at the e-commerce market now, this is the important bit. In the last 5 years, the market in Malaysia has about doubled. Yeah. So from 95 to 2000, the market grew slightly over two times. But from 2020 to 2025, the market is actually expected to almost triple. Yeah, so growth is expected to accelerate in the next 5 years compared to what we have seen over the last 5 years. And if you move on to get more details on the e-commerce on the next page, actually within ASEAN, the Malaysia e-commerce market actually had the highest growth rate. It was actually neck to neck together with Singapore. And if you look at the other growth rates within ASEAN, you will see that growth rates is actually generally quite strong within ASEAN, which is what we are, I think we have shown earlier as one of the mega trends. And we expect actually this sort of growth rates to continue, right? If you move on to the next section, you will see the consumer trends. And this is actually quite interesting. We all know that during COVID, the adoption rate of digitalization has actually increased. But now we are able to actually quantify. According to the survey, more than 1 in 3 of the users to the internet were actually new users. Yeah, they were using digital services for the first time in 2020. So there is actually a lot of headroom for growth here. And we think that the consumer stickiness will remain. If you look at the next chart in the middle, you will see that more than 90% of these consumers are expected to continue to use digital services post-COVID. Yeah, so that's the conclusion for the internet economy. We think that the growth remains in its infancy. We are in early innings, and there are a lot of underpinnings to expect why the growth will continue to be very robust going into the next medium and longer term. So moving on to the next mega trend, which is sustainability in the next section, we want to talk about ESG. ESG is actually not something new in Malaysia, but I think what's changed is that the momentum has certainly increased over the last 12 months. So if you look at EPF, the Employees Provident Fund, this is the largest pension or provident fund in Malaysia. They have actually come out to say that they want to make all their investments ESG compliant by 2030, right? So if the largest provident or pension fund in Malaysia moves in this direction, you can be assured that the other investment firms will also take the lead and follow this trend. And if you look at it, the national oil company, which is Petronas, late last year, made an announcement that they want to go net zero carbon emissions by 2050. Yeah, so a lot of the large corporations are moving in that ESG direction. And more importantly for us as investors, we are actually seeing ESG considerations having an impact on the stock price. I just bring you back to 2020. During that year, Tenaga, which is our national utility company, actually the share price performance wasn't that great. Yeah, it declined by more than 20% in the year 2020. And we think that one of the factors there was actually ESG. Some investors, we think because Tenaga does derive some of the generation from coal-fired plants, we think that some of the selling pressure actually came from ESG considerations. And if you look at another company, which is Top Glove, this is the world's largest glove manufacturer. Unfortunately, in the latter part of 2020, it got into some bad press because of the spread of COVID among its workers, and the worker living conditions were actually highlighted in the press. Yeah, and they got some bad press because of that. And actually, if you look at the performance of Top Glove, the share price during that period, it was actually quite weak as well. Again, we think that investors are beginning to take into consideration ESG when making their investment decisions, and we think that companies increasingly will have to pay more and more attention to ESG considerations. So that's the end of my presentation. I'll pass it back to you, Tony.
Okay, thanks, Francis. Okay, everyone, that wraps up the overall summary that we had on the themes that we were seeing across Asia. We have used our 1 hour time frame that we were targeting, but we'll try to extend 15 minutes because we did want to leave some time for Q&A and to allow you to ask questions to our various panelists. I was trying to find questions for everyone, and I see some questions coming in our Q&A box here already. Feel free to type anything more in. And a couple technical questions I think maybe are important to highlight. I see that someone mentioned that they came on late. Can they see the presentation again? And the answer, as I mentioned at the beginning, is yes, that this is on the UOB Asset Management website, uobam.com.sg, and you can see the whole webinar series, the one that we did in January, and the future ones on sustainability that are coming next will be on there as well. I also see there's an important question about the Digi platform. Does it factor in these trends? And the quick answer is that yes, that the structural trends that we see in long-term growth rates are effectively embedded into the formulas that we run for the Digi platform. But when you go to UOB and UOB Asset Management Invest, that is quite a diversified portfolio, so it's global and in many asset classes, but it is our influence to try to get those structural trends into there as well. Okay, so let me go to this first question I can see for the Singapore office, and I wanted to give it to you, Colin. And the first question I see are just simply, what are some of the biggest risks of investing in Singapore?
Yep. Hi, Tony. Well, I would say that the Singapore as a country is a small city-state with limited resources and the population, as well as a small population mass. The other weakness is that the breadth and the depth of this stock market is also very limited. So for us is that in order to diversify and for diversification purposes, we invest in other Asian companies such as your Tencent, your Alibaba in China, your Samsung in Korea, your TSMC in Taiwan for technology, innovation, and growth. But having said that, I would say that Singapore is generally known for its high level of corporate governance practices as well as corporate transparency. Singapore is also known for its very efficient judicial system. as I also have highlighted earlier, the same REITs is probably an asset class that Singapore has developed, which will cater to the needs of investors who prefer steady income and lower volatility. In short, that is the uniqueness of Singapore, and also as well as other various Asian markets. Over to you, Tony.
Malaysia, is the internet expansion truly a broad-based thing, or is it really just urban-focused, as I see this question is asking?
Okay, I think the perception is that it's more urban, but we shouldn't underestimate the impact or the potential in the rural or the non-metro areas. Yeah, so back to, in my presentation, I think I shared with you all that among the users that use digital services in last year, more than 1 in 3 of them were actually new to digital services, right? And if you break that down, out of that more than 1 in 3, actually in the case of Malaysia, almost 60% of the new users were actually from rural or non-metro areas. Yeah, so definitely the growth potential in the rural or the non-metro areas is definitely there. And this is not only a Malaysian phenomenon. If you look at it across ASEAN, most of the other markets, we are looking at anything from 40 to 60% of the new users are actually from non-metro areas. Yeah. So yes, it is more of an urban thing now, but this thing we think is a long-term trend, and there's definitely a lot of potential in the rural or the non-metro areas.
Okay, I see a question here for Vietnam. And so, Ms. La, the question is, do you think that Vietnam is going to experience positive fund flows into Vietnam?
Okay, thank you, Tony. Short answer is yes. Why? Because first, I think the growth trajectory for Vietnam's economy remains strong. Last year, GDP growth at 2.9%, among the highest in Asia, or even in the world, I think. For this year, consensus forecast points to 5.5 to 6.5%, and I think the growth will be supported by recovering global demand, given the openness of Vietnam's economy to trade. Second, Vietnam market is becoming more attractive with increased market size, significantly improved liquidity in the last 12 months, and more diversified products, particularly in derivatives and ETF space. Onshore investors have been a driving force of the market as they find it a more attractive investment channels in a historical low interest rate environment. And decent yield of corporate bonds in the market is another appealing factor to them. So I think all these factors will continue to support the market this year. Therefore, I think an increase in fund flows to Vietnam market is likely for this year. Back to you, Tony.
Question here that's looks like it's for Taiwan. It mentions that stocks like TSMC are up 60% over the past year. Are valuations too high? I think is the heart of this question. Samuel, can I direct this question to you?
Okay, sure. I think we may be facing some rotation or market pullback in the coming months due to overheating in tech stocks, like you mentioned. TSMC has risen more than 60% in 2020. However, we think if the Fed still keeps its dovish stance, we still see any pullback as a healthy one and a good buying opportunity for Taiwan stock market. What I think that is supported by two main reasons. First, from GDP perspective, Taiwan GDP is one of the few countries that delivered 3.1% positive GDP growth in 2020. The forecast made by the government recently even revised up 2021 the GDP the growth to 4.6%. So from GDP standpoint, we can conclude that the well control of the pandemic actually has set a solid foundation for Taiwan economy. Second point to highlight is from the valuation front. If we take Taiwan earning growth into consideration, what I get from Bloomberg consensus showing the 19% and the 10% earning growth in this year and the next year. Actually, we will find that the Taiwan market PE is not expensive. The forward PE is 18 times for this year and 16 times for next year, given historical average PE is around the 17 times. So I think it can justify the Taiwan stock market still have an upside potential this year. However, for the risk side, I think this is also very important to consider. What we should keep monitoring is from the risk perspective, whether key companies' monthly revenue and the quarterly results are in line with optimistic earning growth projections, whether TSMC, the ASE, and the MediaTek, these leading companies, change their forward guidance, earning revisions in the coming quarters. I think those are the things that we should also keep in mind and keep monitoring from Taiwan market. Yeah, I hope this answers your question. Hand it back to you, Tony.
Okay, thanks, Samuel. So I think thank you for all your questions. I know there are more here, but we are running up to our budgeted timing. And so to wrap up, I would like to firstly highlight that if you can see on your screen the code for the events survey, this helps us a lot in knowing what helps in these webinar series and how to make sure we are angling it to meet everyone's needs. So please try to capture that and fill that out. And then in conclusion, I guess I just wanted to say thank you again for tuning in. Please tune in to our next webinar series that will be on sustainability and some of the exciting trends that we see developing there. And look forward to talking to you all more in the future. Thank you.